Right. We are live. Super Bowl, Rob.
Well,
Any thoughts?
hang on, Rich. Rich, I know Super Bowl.
Hmm.
You're letting your hair grow out a little bit.
I actually just got a cut.
Really?
Yeah. So So I mean the sides and the back really, but thanks for noticing.
Well, you're a coiffure or something at paramount in my world. But for a long time, you kept your hair very short, and we were almost kindred spirits. And then you decided to let it grow out, and you realized that you actually had a full head of hair.
We were getting a lot of complaints from the viewers and listeners that there was just no hair on the show. So I was like, all right, I actually have hair. I'm gonna let it grow out. So
Yes, I deserve that.
you you dodging what's your Super Bowl pick?
Who's in it? The Kansas City and Philadelphia, right?
Chiefs Eagles.
There's a lot of deep-seated uh, weariness I get around the nation uh, about Kansas City.
Hmm.
So I got to root for Philadelphia, even though they've done very well in sports over the last, 100 years. What about you?
As much as Mike Hano is going to hate to hear this, I mean, well, I probably would rather see Philly win, but I cheer for who I bet on. And I've just made gobs of money just betting on Mahomes and Reed these last 3 years. I'm not about to get off that bandwagon. I can tell you that right now. I just Reed and Mahomes versus Hurts and Sirianni feels like a one score Kansas City win to me. So, Joe, Super Bowl rooting interest, pick.
So I was born and raised in the Bay Area.
Okay.
And so my 49ers have been beaten by the Chiefs
Hmm.
in the last two Super Bowls that the 49ers appeared in. So I'm rooting for anybody who's playing the Chiefs at this point.
Yeah, my guess is like three-quarters of America is, I think, rooting for the Eagles if I had to guess. So, but I kept betting against Tom Brady. Floyd, Floyd Mayweather, you could throw in that mix, but lost a lot of money praying somebody would knock Floyd Mayweather's ass out. And I've learned my lesson, and I'm sticking on the Mahomes train. But it should be a good game. I think it's going to be close. I think it's going to be a one-score game. And I could honestly see an outcome like the matchup 2 years ago, where, close game throughout. Jalen Hurts holds onto the ball a little too long, fumbles, and that's the difference. So, but yeah, and Kelsey's a Clevelander, so we got that tie. So, but all right,
Yeah.
let's go ahead and get into it. This is the big picture. I'm Rich Swerbinsky with Onward and Upward Consulting, and joined, as always, my esteemed colleague and co-host, Rob Grisman. Rob, great to see you.
You too. You too.
And this week, really pleased to be joined by a very special guest, the CEO of Optimal Blue, Joe Tyrrell. Joe, thanks for joining us.
Well, thanks for having me. And I apologize in advance. I'm not really contributing much on the hair side, unfortunately.
That's okay. So,
I've been
but
told I should go to Istanbul.
they
Uh,
have like hair recovery
I
magical
they
stuff
they
there.
I've talked to people who have been there, and on the flight back, um, they say half the people are bandaged up for whatever procedure they went through. I don't know. I don't
Ever,
know.
ever since I saw the movie Midnight Run, I'm not going to Turkey. You know,
That was a very memorable movie.
incredible movie going in the
Brad
way.
Davis, Brad Davis. Yeah.
Yeah. So.
All
And
right.
I should note that the big picture is presented by our friends and partners at Depth. 2 decades, very ably serving the mortgage industry, the fintech industry, PR, branding, communications. If you need your story told, the fine folks at Depth, the ones to do it. And we thank them very much for aligning with us here at the big picture. So, well, let's get into it, Rob. All kinds of stuff going on. We mentioned the Super Bowl. The Cavs just traded for DeAndre Hunter. We've got the CFPB on pause right now. Of course, interesting news. Scott Bessent Trump's Treasury Secretary. He's done some interviews and just talking about their methodology about trying to bring down long-term Treasury rates. Some of the things that they feel maybe have contributed to spikes up in the yields on 5 and 10 year Treasury. Scott Turner, former NFL cornerback, just approved as the HUD secretary. So as usual, I throw you a ball of stuff and see where you take.
Gelatinous. Yeah. So yeah, the Warriors take the easy one first. The Warriors traded away Andrew Wiggins to Miami for Jimmy Butler. And Jimmy Butler certainly has his fans and people who think that he's got a big ego and they aren't fans. So that'll be interesting to see. But on a personal note, kind of personal, Andrew Wiggins apparently, and I was talking to Robbie about this, my son, they and we're not going to go down too far down the NBA path here, Joe, don't worry. But there's a prototype. Like if you were to design the perfect basketball player, height, weight, muscles, stature, whatever. Apparently, Andrew Wiggins came very close to the perfect basketball player physically, but Andrew has been very streaky over the years, and he's taken a fair amount of time off over the years to like he just disappears. Turns out he's spending time with his dad, but so he might be physically wonderful, but pro sports, any sports, as we know, is part mental, part psychological, and so the same I would say with Rich. The all the other questions that you asked is here are the facts, but what's going on psychologically in Washington D.C. What's going on with the new administration? Um, the Trump declaring that he's going to demand interest rates go down, and everybody in the financial community said, well, the president can't demand that happens, but certainly the appointees and the restructuring and some of the things that are going on in Washington D.C. on the regulatory front and also the administrative front certainly will impact lending. And for those of you who subscribe to my commentary, I get a lot of emails saying, "Gee, Rob, it seems like you're talking a lot about politics lately, and what's happening with the regulatory bodies and so forth." That's because Washington D.C. is intertwined so much with lending that you just can't ignore a new administration. You can't ignore what Donald Trump says in the press that can move markets. One day talking about tariffs, a day or two later, oh, I'm going to delay those. And so it's been from a capital markets perspective very interesting, and I would say could be relatively difficult if things get volatile, because there's one thing capital markets folks don't like is volatility. So we're keeping an eye on that, and from a regulatory perspective and personnel perspective, there's a lot going on with the HUD secretary and the CFPB and so on. So sometimes it's tough if you're a lender, to know what to watch. Yeah, because there's so much going on in the headlines that we'll see what happens. But for now, I think it was good that he came out talking about longer term treasury yields rather than short term treasury yields or overnight Fed funds. So that's good. I don't think I think I'll finish up with this, and I'll throw in some personal bias here. I think many capital markets people would be upset if Donald Trump gets bored with whatever he's doing and decides to inject himself into our Federal Reserve and the Federal Open Market Committee. I think they're best left alone and standalone, independent group rather than having a lot of presidential influence. But there are other ways to move interest rates and the spreads between treasuries and mortgages and so forth. So yeah, a lot to follow.
Good
But I
stuff.
wanted to ask Joe. I mean, Joe, you're coming. Well, Rich, are you going to say Joe needs no introduction, or are we going to give Joe an official introduction? Because I do have a question up front.
I'm
Rich,
gonna,
thoughts?
the CEO of Optimal Blue, Joe, and your history. You were the president, right, of ICE Mortgage Technology, if I remember correctly. And then before that, you were what, the COO of Ellie?
Yeah, yeah, for a number of
Oh,
years.
so that's quite the resume. Yeah.
That
But
just means I'm really old.
And Rob, your
uh,
heckler is back in the Q&A asking how many of those books in your background you've read.
when I used to read books, I used to read a lot of books. So I'd say a lot of them, a lot of them, if not most. Um, the thing I want to ask Joe, Joe, you're coming off a great event, an industry summit in San Diego, and I've heard some very good things about it. And one of the things I've heard is that Tony Hawk was there, skateboard. It's kind of like Lance Armstrong. If you say somebody, if you say to somebody bicycle racing, they say Lance Armstrong, even though he's been retired for years. It's like the bike racer people know. If you talk to somebody about a skateboarder, Kingsley Greenland. All right, Kingsley, settle down there. Yeah,
Now that
that's
he's on
right,
the
Tony.
best names list, he's very bold these days.
Yeah,
That's our resident climate
um,
risk expert,
yeah.
Kingsley. Yeah, there,
Oh,
yeah.
Rich, one thing you didn't ask me about is the administration removing the words climate change from every government website that
Hmm.
exists. But that's a different topic. Um, Joe, what was Tony Hawk like, and do you guys talk about interest rates and housing, or what did you guys discuss?
Yeah, it was a fascinating conversation. He's 56 years old and he still skates. In fact, he was leaving our conference to directly go to a skate park where he was going to spend some time skating. So it's just incredible to see him at that, just really active, still out there, performing tricks that even people a third of his age aren't able to master. But what was interesting for us to have him at our conference is he has this really strong affinity for home ownership. And so when we dug into that a little bit, he was talking about when he was 14 years old and he decided to turn pro and just started to make money at a very early age. And by the time he was 17, he was earning six figures a year. And he mentioned that he just felt like, at that age, he thought that would just be the new normal. Like that's was going to go on forever. He was always going to make that much money. And so he was spending it on, crazy trips with his friends and crazy things that he would purchase. And so his dad sat him down at 17 years old and said, you need to buy a home, and really stressed to him the importance of home ownership. And of course, even though he had the money at 17 years old, he didn't have the credit. So his dad had to co sign for him on the house and just encouraged him about the importance of home ownership at that point. Well, a few years later, he's now in his 20s and he decided he was continuing to make money. He was going out and going to build the house of his dream, like a compound with like literally a skate park in the backyard. And so he did, and he really kind of in his own words, he overspent. Well, then what happened is, he was a vert skater, meaning he was doing these vertical um, types of tricks that he would do and in pools and those sort of things. And everything really changed in like 1991 when all of a sudden, what a real skater was they skated the streets. And so it was jumping over stairs and it was sliding down handrails, and he didn't do any of that. And so the next thing you know, he found that he said like his sponsors called him one day and said, "Hey, we're going to have to cut your revenue, what we're paying you in half." Next month, they cut it in half again. Third month in a row, they cut it in half. Next thing, he can't afford to live in this house that he built for himself. And at this point, he now has a wife and a child. And so thankfully, he followed his father's advice and he bought that home when he was 17 and he kept it. So he was able to take his family, even though he lost the kind of house of his dreams, he was able to move into that house that he bought when he was only 17 years old and had a great place to raise his family. And so it really hit home with the folks in the audience, who are predominantly in the capital market space, but we had some folks that were running originations and production, and it just gives a lot of meaning to why we do what we do.
Nice.
Yeah.
Yeah, that's a good tale. Very good tale.
Yeah, and he's
So
just a humble guy.
And Joe, you said that at the user conference, you guys rolled out some new things. Can you blow the lid off that for the listeners here?
Yeah, Rich, I could even give you a little bit of a layer back in the onion. When I was at Ellie Mae or running ICE Mortgage Technology, I had partnered with Optimal Blue for 15, 20 years. Knew the founders well, knew all the people who were running it well. And the one thing about Optimal Blue I always knew going in was just its unrivaled accuracy. And still today, there is just no system as accurate as Optimal Blue. And this is the one thing you just got to get right. You know what I mean? It's the pricing and where you're making all your money. And so when I came in, I was really looking to complement that accuracy with some additional competencies that I thought we could really help our lenders with. And so what we introduced at the conference was, first, before we got into all the product launches, we talked about kind of the 5 new things in Optimal Blue. And the first is flexibility. So we talked about, hey, if there's something that your business really needs that our system doesn't do, in the past, you might have come to us at Optimal Blue and said, hey, can you do it? And pretty likely you were told no. We've eliminated that word at Optimal Blue and we've replaced it with when. So if we have a customer who really thinks there's something that can have a meaningful impact to their business, if we do something different or add a capability, we're going to do it. Now, in order to tell people when, the second thing we had to do is be far more transparent. So at our conference, we rolled out roadmaps for every single product, telling everybody what we're doing for the next, call it 5 quarters. So everybody knows exactly what we're doing. And this way, when someone says, hey, I really think I need this, first, it's probably already in our roadmap. If it's not, then now they can see exactly what we're working on, and then we can work to prioritize it together. And the reason why that's important is there's some really big things that we're doing. A lot of it came out at the summit we had, but a big focus for us is the third key competency is just accelerating innovation. I joined in June, and the first thing we did is we looked at the roadmap because I kind of tend to look at the businesses I run through a product lens and like what's the value we're delivering. And so in just literally 7 months, this team rolled out 5 brand new generative AI capabilities that are going to just drive massive value for our customers. So that innovation was key. And then the last 2 core competencies, the fourth one was what everybody was asking at the conference. Like they saw everything we rolled out, and the number one question was, how much is this going to cost? Because, there had been a bit of a reputation with not just Optimal Blue, but a lot of tech companies in the industry that you bring something out, but then you charge for it. And so everything is like this nickel and diming of these lenders who are just trying to get more efficient. So that's another big focus, is that we're going to be delivering a lot of value, including everything we rolled out at the summit the last couple of days at no incremental cost to our customers.
Wow.
We really kind of retrenched as a company, and we took a step back and said, like, what's our purpose? What are we doing here? Like, what impact are we trying to have, and what problems are we trying to solve? And so we came to the conclusion very quickly, it's all around the profitability of our customers. It's funny. I think one of the most useless data points in our industry is the cost to originate a loan. I just find it useless. It has not really changed in 15 years. It kind of goes up and it goes down, but the reality is the fixed costs for the most part stay the same. And what drives it up and down is volume in the industry. Like, last year, a lot of lenders let go of a lot of people. So at the beginning of the year, the cost of origination was low. Well, as the volume came back a little bit, what did they do? They hired people back. Cost of origination went back up. As the volume dropped, cost of origination went through the roof. And so what we're focusing on is what's underneath that. Like, pull LO comp out, right? And just focus on controllable expense. What we're interested in seeing is, how are all of the operational costs decreasing at a rate that's 5 times higher than the cost of your technology spend increasing? So that's what we're really going to target, is how do we help them get rid of operational costs, but in our case, without any increase in their technical spend. And then the last one was just more control. I had a lot of kind of joint customers over the years. It would, blame it on Encompass, blame it on Optimal Blue. And at the end of the day, they just wanted more control. And so that's what we're now doing. We introduced a lot of new configuration capabilities, putting more control in the hands of our customers. Because in this business, it's just like what Rob was saying, right? There could be just a rumor of something that this new administration is going to do, and the markets respond. And if you're a capital markets executive and you want to get ahead of it, you can't wait to send a request into a tech company and have it sit in their queue. Like 1 o'clock in the morning, if you're waking up because you're worried about it, you need the ability to go into your system and make a change. So that was the other big thing we introduced. And then aside from that, which is really just kind of how we operate the company now, it was just a lot of new features, capabilities, products, most of it all driven by generative AI.
So do you know what I mean, I know you guys do a lot of different things at OB now, and have expanded the scope of the platform, hedge advisory, things like that. But just PPE, like what your market share is, I mean, it's got to be, I mean, I remember hearing a stat not too long ago that was a pretty high number. Do you know that number?
Yeah, so and it all depends upon how you want to look at market share, right? You can look at it at, what percentage of the customers that would use a secondary marketing tool do you have as customers? That number is fairly high, probably a little over 50%. If you look at just total volume in the industry that's going through the pipeline, that number is closer to 40%. And then we look at it kind of in between, what we do with kind of the optimal blue PPE, which is that 40% number that I gave you. But then if you also look at just an incredibly growing area of our business and how much origination is now being done by brokers versus even just 5 years ago, our loan sifter solution, which is really kind of the PPE for the broker community, that has got massive, massive adoption, is the most dominant PPE in that space by far. So, we've got a good insight into what's happening to the market just because of that market share. And now it's about how do we just bring more and more value without any incremental cost to our customers.
Any other trends, Joe, you're seeing just in capital markets? You're just with a bunch of your customers this week, things they're talking about or bringing to you in terms of new business challenges or trends in the cap market space?
Yeah, I'd say that it really falls into three different buckets of kind of the conversations we've been having in the capital market space. The first is something that Rob was talking about at the beginning, just, what's going to happen with the new administration? How much are they going to try to meddle with the Fed in terms of impacting interest rates? But then there's some other things from a potential deregulation that's interesting. There's a lot of questions of how much will banks come back in to the mortgage space. The SEC has signaled that they're willing to lift some of the burdens on banks for mortgage-related assets. I think the new administration has also signaled that they're broadly going to look at regulations that are impacting banks. So, if the banks decide to come back in, what will that mean? Will we get to more price competitive just because they're coming back in and trying to buy some market share? So that'll be interesting one that I think a lot of folks are watching. Believe it or not, on the origination side, the broker channel that continues to grow, was very low single digits not that long ago and is now around 20-21% based upon, who sees it. That's another interesting thing that they're looking at, both in terms of like how well tied into those markets are they, as well as cost of acquisition. Then when we look at it from the technical bucket, the good news is I think a lot of people started to get a lot more comfortable with the idea of automation and AI in 2024, especially the second half. So you saw companies move from we're gonna dabble in it to we're gonna test it to all right, now we've seen the benefits that can come from it. How do we actually roll this out? A big issue that we're hearing in a lot of customers though is change management. As you know, in 2024, when there was a lot of layoffs in the industry, they lack some of the expertise and just horsepower to get some of this done, which is why companies like us are actually stepping in and not just bringing the solution, but actually helping them understand how to deploy it in their organization and then track and measure over time what's the actual ROI that they're getting. And not just on the AI, but we're doing it now for any product that you use. So we're sitting down with customers on a pretty regular basis, and we're doing a full-blown review of everything that they're using and what they're not using. But we're not talking about things that they're not paying for. We're only focusing on the things that they're already paying for, but are not leveraging. So you may have a PPE customer who's using 3 of 20 capabilities. So we're coming in saying, here's the value of using the other things you're already paying for, and we'll actually help you at our expense come in to help you use it. So as we help them really focus on the ROI and start to measure it, it's just creating great conversations with the customers. So from the tech side, it's great to see they're finally starting to trust the tech a little bit more. And then on the third side, it's really about what they're doing from kind of a people management, people resources. How are they getting the most out of what their folks are doing? And so luckily for us, as we've been deploying AI, we're not coming in with any expectations of trying to eliminate people. I grew up in this industry as an originator, then an underwriter, and ultimately as a chief credit and risk officer. So I know that in our industry, if you make a mistake, sticks with you for a long time, life of loan or even beyond. And so all of the AI that we rolled out just in the last 2 days has been all about helping people do their jobs, not trying to replace them. Because as great as it is to see them accepting technology, we know that they're not ready to just turn it over to the automation and to the AI. They still want people looking at things and exception-based processing. So it's great to see they're thinking about how do they maximize what their people do, not just how many people they have.
This is the big picture presented by our friends and sponsor at Depth. And we're here today with the CEO of Optimal Blue, Joe Tyrrell. And Joe, the competitive landscape, you mentioned broker. They claim they're 21%. I don't know if I believe that 100%, but it's definitely up, from what it's been. We've seen though, like when you go into these kind of bearish markets, broker market share historically has kind of gone up, and then on the flip side, it kind of goes down. How do you see that? Just the competitive balance, and once we get into a more normal market, do you see brokers continuing to gain market share?
Yeah, I mean, it's interesting. My history in this industry goes back to a point when brokers were 65% of originations. And then, of course, when the housing bubble burst and brokers took basically the brunt of all the blame, even though we all know that it was really driven through kind of insurance, reinsurance, and a lot of what was happening in the secondary market in terms of just this appetite and demand for more and more loans. That broker community got hit really, really hard. I'm kind of with you, Rich. I don't know if the number is 20, 21, or 16%, because I think it's, who's measuring and how they're doing it. But you definitely can just see from where the volume's originating that the brokers are a much bigger part of this ecosystem than they have been historically. I don't know that, and I don't think it'll ever get to the way it was before '07, but I do see them as just being this constituency that we've got to make sure that we're thinking about and introducing technology to also solve for. Luckily for us, we already have kind of the preeminent solution in that space with Loan Sifter. And so for us, it's how can we do more to empower them? How can we give them more tools, more capabilities? Even back in my days at Ellie or ICE, the vision that we had was to create a completely turnkey solution for a broker, similar to kind of what UWM has done, but our intention was to do it so that it was completely independent. You could leverage this technology and still go wherever you wanted to go. So there's some things we're looking at Optimal Blue that's going to probably get us closer to that original vision that I had. And I think all that does is it just helps the consumer, because it's one thing to have somebody who's going to not only advocate for you and educate, but give you all of these different options. It's another when they can be just as efficient and as effective as a much larger kind of retail shop. So In fact, one of the tools we just introduced 2 days ago is directly aimed at originators to help them be more successful. It's a generative AI tool called Originator Assistant. So, like, I was an originator when I started, and I think, what's crazy is the way that I did loans then, which I won't tell you how long ago that was, but it was a while, is kind of still done the same way today, right? You walk in to sit in front of a prospective borrower, and because you're a human being as an originator, you bring what you call experience, but what also can be looked at as bias, right? I sit down in front of somebody and I'm immediately thinking, okay, is this an FHA buyer? Is this a conventional buyer? I start to have some preconceived notions. Then I start taking their information. And then as an originator, once I get too qualified, I stop. I don't keep going to see what other programs they might be qualified for. I don't see if I can get them qualified for the next 6 loan programs because I got to yes, and that's all they wanted, and that's all I wanted. With Originator Assistant, what we do is we use AI to look at the data for that borrower, prospective borrower, and then we scan every loan program. And not only do we bring back every program that they qualify for, which now kind of does all the work for the originator, but now they can see it all in one screen, and it kind of educates the originator as well. But we also highlight for them the most advantageous loan for the borrower as well as for the company. And then what we also do is we highlight the programs that they don't qualify for, but they just missed on. Like you're 5 points away from the credit score requirement that would qualify you for this loan, which would get you a better rate. Have you thought about closing one credit card? Or if you put $3,000 down more, you would qualify for this loan program, which would get you an even lower rate and lower payment than what you're doing. So it's a tool really designed to make sure that while everybody's trying to figure out how do they not introduce unintended bias by using AI, we're using AI to actually eliminate the bias that comes just through human beings. And so we're excited about that tool for both the broker market and for the traditional retail.
That's a lot to bite off.
It is, and the good news is working. So it's launched, it's ready to go.
Nice. Joe, how would a typical loan officer at a typical company know that their company is using AI? Is there a way to, I mean, where do companies start when they roll out or when they get involved in looking at AI? Are there baby steps that lenders take?
Yeah, it's interesting, Rob. So, I know folks know me from my time at Ellie and running ICE Mortgage Technology, but before I joined Optimal Blue, I spent a year and a half deploying generative AI, running a company where my clients were the biggest brands in the world. So I was deploying generative AI for Apple, for Meta, Walmart, Target, Mercedes-Benz, Marriott. And a lot of these big companies all wanted to adopt AI, but they were all looking, where can we deploy it in a way where it's going to have kind of the least opportunity to introduce something that's not intended. And so they were all deploying it in their customer experience technologies. So being able to respond quickly back when a customer reached out to them, being able to surface data and kind of jump to conclusions to arm the people that were interacting with customers. And if you think about our industry, if you're going to deploy AI, it's got to deliver a high level of value with a low to almost zero level of risk, right? And so we've taken the same approach of what I was doing for the last year and a half, and that's what we've brought to the mortgage industry. We're using them as assistants, co-pilots, not to replace. So they're sitting side by side with Originator Assistant. It's serving the information up and doing the work that an originator would have to do that they may spend hours doing, or worse, not do, because they already got to a yes. And it's surfacing all that for them. At the end of the day, it's still the originator who's working to select which is the right program. We're just doing all the work that they would normally have to do to make them more effective. If you look at things like our Confirm Assistant, so this is another generative AI solution that we introduced at our conference over the last 2 days. From a hedging perspective, we've released, we have introduced the AI assistant that will go into our Compass Edge hedging and loan trading platform. And so now what we're doing is reducing both the time and all the potential for manual errors associated with TBA trade confirmation files, because the tool is using our AI to read files from the broker dealers that usually they would be passing the documents and then someone would be reading through them. We're converting all that data into usable formats, and now users simply just drag and drop the confirmation files and it does all of the validation for them. So simple ways where you can get a high level of value and no level of risk. But to answer your question, a lot of companies are talking about ethical use of AI, where it's like no harm, not introducing any bias, those sort of things. But the thing that a lot of them are missing is, how are you informing the rest of your company and how you're leveraging it so they're comfortable using it, knowing that it's not going to introduce something that they're going to be held accountable for. And that's a big part of what we're now doing with our clients through the change management solutions. We reorganized the company in around August to introduce client success managers, not salespeople. These are former tech support folks, former product people, former implementation specialists, and their sole job is to help when a customer of ours wants to leverage any of the AI, to work with them on the change management, not just on the operational side, but in communicating to the entire organization what they're using, why they're using it, and how it'll impact their job. So I think you're hitting the nail right on the head. This is a big gap. If lenders are not thinking about educating their team, then it's going to get very low adoption, and they're going to have wasted a lot of time in implementation.
Right. Yeah, I agree 100%. The vendor, it's great to have a great product, but if the sales staff or the company doesn't understand it or buy off on it, what's the point? And at this point in the business cycle, what I'm seeing, and Rich and I have talked about this on previous shows, but during the heady days, from 5 years ago when, loans were falling out of the sky, to now, back then, vendor management was just, let's add the software, add whatever software you want to bring a branch on. Let's add whatever software they want. Now, vendor management consists of actually looking critically at the pieces of the tech stack, as I call it. Uh, Actually, I've heard that term, but looking at things critically and saying, do we need this? We added this for Susie LO 3 years ago, and we've run one loan through it. What are we paying What are we paying for here? So vendor management has become almost a weeding out function for many companies, or a try to figure out how we can make this better. So it's interesting how that's changed.
Yeah, and I think there's two really important points there. So one is, a lot of times you're seeing something cool and you're like, great, it's got all these promises. How do we start using it with our existing technology in the tech stack that we have? And what you find often is that if you're going to want to use it with a core platform that you already deployed, you have to first validate, is that platform AI enabled? And that's the thing. For a platform to be AI enabled, that means they have the ability to receive and integrate and work with and interpret and translate data between themselves and the new AI. So before I joined Optimal Blue, I kind of came into it like with, I think, assumptions a lot of people had is, well, Optimal Blue's been around for a long time, so that must be like older tech, right? Before I joined, I'm like, can I see the tech stack? Can I see a topology of what we're doing? And I was shocked. Like, this is all modern technology. So everything's been modernized. It's cloud native. It's an API first approach. But the key thing for me was it was AI enabled. So they've already had been working with all of these different AI models, different LLMs, commercial LLMs, is experimenting with their own. So I came in and I've got a modern tech stack now that is reliable, accurate, and scalable, but it's AI enabled. So when I came in with, I want to do these 4 or 5 generative AI things, the team was like, great, we'll introduce them at the summit 7 months from now. So you gotta make sure that your current vendors, the current folks that are in your tech stack, can actually work with generative AI. The second is you gotta have somebody who knows how to keep up, right? 3 weeks ago, there was a joint venture announced between NVIDIA, SoftBank, and OpenAI. $500 billion joint venture. The market was going crazy about what this was going to mean because their focus is on developing and driving adoption of generative AI using a lot of the LLMs that exist today. 1 week later, DeepSeek gets announced. DeepSeek comes out with an algorithm that can be trained and operated for a fraction of the cost of any of the commercial LLMs. If you're a mortgage lender, you're sitting there going, what does all this mean? Like, where do I start? Who should I use? And so you're going to want to pick some partners that have got expertise and experience in using AI that you know it'll work with their platform. That's how you get started. And then from there, you learn and you can grow your ability to leverage it.
Yeah, I wrote about DeepSeek, and unfortunately, there are flaws.
Yeah.
Like if you ask it about Tiananmen Square, or human rights violation, but the Chinese, Anyway, we won't go down that path, but it does. What that reminded me of was that if you're putting your hands in, or if you're putting your company in the hands of some technology, you need to make sure that it's accurate and it's not biased. And you can eliminate, like, anyway, we're the ethics of some of these things. I think the technology has surpassed the ethics and what the implications, what might happen there. So, Rich, we should do a show on that sometime. Business ethics.
Ethics. Yeah, no, it's yeah, I think, well, especially if the CFPB goes away. That would be a well-timed topic. So
Oh man.
speaking of that, yeah, you mentioned the regulatory side of the business a little earlier in the show. As leading capital markets software, is there any potential regulatory relief or federal policy changes that you guys have your eyes on that could kind of really fundamentally change the way that lenders kind of like price and sell loans?
I mean, we're watching everything. I think it's such a curious time to be in where, I think a lot of people thought, well, we've seen this administration before. And so there was expectations of what was going to happen initially. I think a lot of those expectations have been just completely blown up. So now nobody really knows what to expect. I think we're generally expecting a lot of deregulation to take place. I think the challenge for the mortgage industry, and if you just go back and look at whether it's RESPA, TRID, any of the major changes in our industry, it's not about regulation and it's not about deregulation. It's about the disruptive of change. So all of these lenders have, okay, if the rules are over here, we're going to organize ourselves to follow these rules. Well, then you change it and the rules are now over here. Well, that means the lenders and all of the technology partners and providers who support them have to do all of this work now to move over to follow this rule set. So whether you're adding regulations or taking them away, the most disruptive thing in our industry is the change. And then this is where a lot of lenders are understanding where they might not have made good decisions with their tech partners, because some of them are just not able to move as quickly as they need to in order to ensure that those lenders can operate in whatever environment that gets handed down from the various, whether it's the agencies or the government or even, forget the federal government, then you have kind of state down to sometimes city things that you have to deal with. So for us, we're trying to make sure we remain focused as just agility. When the time comes and change is introduced, we want to make sure that we're in a position that our customers never have to wait for us to catch up, but we're already there waiting for them to grow into it. So that's the big focus at Optimal Blue.
Nice. Good way to end the show, Joe. Jeez. Trained
Yeah.
professional here.
And as always, the time flies by. But Joe, I want to thank you so much for making time to join us, especially coming off the heels of it was your first ever OB user conference, right? Which is hard to fathom because you guys have been such a name and brand in the
Industry
industry for
Summit,
so long.
Rich.
Industry
Industry
Summit was
Summit.
the industry summit. So was that your handiwork, your brain work there, Joe?
Yeah, I mean, I'm used to doing this level of engagement with our customers and having really big things to introduce. So bringing that to Optimal Blue, the team was so excited about it, and they all just did such an incredible job. But the most important thing for us was just, the impact it'll have on our customers. They all left there with things they get to immediately start to use without having to pay for. So that for us was the most rewarding part.
And listen, San Diego in February, that's not going to hurt either,
Can't
So
lose.
yeah. So, well, once again, I want to thank Joe. I want to thank my co-host Rob for once again joining us as always, and most importantly, our viewers and listeners. We go live on three kind of different formats here. The live on Zoom. You can join the live broadcast by registering at chrismancommentary.com. And we also, the show, about 5 minutes after it ends, will go to podcast. You can find that Apple, Spotify, and all the usual spots. And then, of course, on YouTube. And want to thank finally our friends and partners at DEP for sponsoring the show and making these conversations with leaders like Joe possible. So many thanks to all, and
Yes.
enjoy the Super Bowl, everyone. Robbie throwing a big party for the Super Bowl? No, no,
I don't know what Robbie's doing for the Super Bowl.
partying.
Ha,
I can answer that one. So, I
yeah.
mean, age, I'm not casting any aspersions on Robbie. I just remember when I was that age, what I was doing for the Super Bowl. But so good stuff. And we will see everybody next Thursday at 3 Eastern on the big picture. Have a great rest of your weekend, and enjoy the Super Bowl, everyone. And we'll see you on the flip side. Take care, everyone. Thanks, Joe. Thanks,
Thanks,
Rob.
Joe. Thanks, Deb.
Thank
Thanks,
you.
Rich.